I can't tell you about the power of this methodology. Now look, let's just have a look at the situation now. Okay, this is how my mind works. Okay, so we've just had that fantastic sell-off. Okay, down to this level here, and there's a massive wick there. So there was obviously a lot of buying pressure at this level down here, and that's sent price back up some. You know, that's 278 pips that market has retraced back up. However, what I see in that retracement is I see opportunity, guys. I see another opportunity to get short this market. So let me just see how I'm going to view this. Let's go up to the daily chart. There's my daily chart. Now, where's my next level of daily structure going to be? Well, if you go to the left, there's just nothing. Price has fallen, so let me go up to the monthly chart. Price has fallen so far, there's just no daily structure to be looking at. And in fact, the nearest structure is where we touched earlier on today, and that's south. So let's go back to the daily chart. So the only bit of daily structure is probably here. So let me just place a small line across there. Here. Come on. Here. So between here and probably here is a great area to sell. But the question is, do you feel that this market, after such a strong sell-off, do you think price is going to retrace that far? It may do. But what I do, I'm looking to see what's inside these bars. I like to look underneath the skin of a price bar, and I go down the time frame, down my time frame, down the time frames. What do I see? Okay, so here's the first level of structure. Well, what does that mean to me? First thing I do is grab a fib. Okay, now what is of interest? You see this 618 line here, okay? There's a small level of structure there. Don't know if you can see it. There's little 3-bar pattern where price paused for a while. Let's get rid of this. Price paused for a while and then sold off. Now something happened in there. There was something in there strong enough to hold prices for a while. So what there could be at that level, there could be some sellers again up that level. So let's have a closer look. Let's take another measurement. Now, to me, this wick is a daily extreme. I'm not looking to use this in any measurement that I do. So if I was looking to short this market, I would probably, even that in itself is probably too big. I would probably look to take a measurement from here. Inside of those two huge bars, I would probably look to use a more realistic measurement. And as you can see, equal legs comes into that area. So let's just get that fib back. And pull that fib down. Okay? Now, look at this. Look at this area. 618, equal legs, equal legs, fib extension. Okay, we've drawn our little box. Now let's get rid of these measurements. Get rid of these measurements. And there we have a potential reversal zone to potentially sell. Now I'm not just going to let price get in there and sell. I'm going to get price has to enter into that area in a certain way. So let's keep an eye on that, guys, because yet again we could get on board this market, and you know, we could just get back down to where we were, which is down here. And if we did that, what are we looking at? Well, okay, let's have a look. Let's say we got in here, for argument's sake, and let's say we traded back down to here. That's another 430 odd pips. So let's see if that plays out, guys. We're going to keep an eye on this. You know, that if let's say we took the trade and it bombed us out and we lost money here, the next level of to be looking to sell this market is definitely back up in this area here. Okay, but I don't think, my gut, well, it's not my gut, I feel that this market is way too strong a downtrend to be going that far up. So I'm going to leave it there for now. We've been in here 20 minutes, longer than I expected to be. But guys, I want you to keep trading your plan. Forget about the financial side, as in the money you could make. Remember, trade the process. Fall in love with the process and you will become a better trader overnight. Speak to you all soon. Good morning, traders. It's currently Tuesday, the 10th of March, and it's currently 4 minutes to 7 a.m. UK time. I just want to very quickly go back into, follow on from my previous video, whereby we talked about this Australian dollar, Japanese yen trade, whereby we'd been in this market. Okay, let's just go back down to the daily chart. We'd been in this market and we'd made a huge amount of money so far from here to here and from here to here. And last night I said I put forward this area of potential reverse again to see if we could play this market. So what we've got currently is, as throughout the night, prices made its way into this area of interest. Okay, and it's not only has it made its way there, it's made its way there in a manner that I look for a market to make its way into an area. Now what has happened since that is it's got to this area and it's given us a failure signature. Okay, so because this market is in such a strong downtrend, we have no choice but to play this. You know, it's part of our rules. When we see a setup, we take the trade, and this is what I intend to do now. Now, as far as targets are concerned, if you remember in the video last night, what I said is I would try and play it back down to the same area that we took profit before, which is down somewhere down here. Okay, so just let's just have a look at the situation right now. Let's just measure this out. Okay, 388 pips. So what I'm going to do is I'm going to go 350 pips. Okay, so I'm going to go in just there. So let's get this trade set up and let's see what can happen throughout this day, if anything, and you know, see if this can work. 1 second there, traders. Okay, so here we are with our measuring tool, which we like to use. So let's go, let's do this as we always do, same old routine, right back down, 353 pips. Okay, where's my stop going to go? Well, let's have a look at this. Currently, if we look at this, our stop is at 122 pips above our entry price. That's way too much. You know, even though it's a for this account, even though it's a 2.9 to 1 risk reward, that's too much risk for me. So what I'm going to do is I'm going to take a fib and measure from where we measured yesterday. Okay, and I'm going to add to that fib. Let's just go into settings here. I'm going to add a 786, and I just want to see where that places me as far as risk is concerned. Well, okay, it places me just above the top end of that zone, which is actually the 127 extension. Okay, so what I'm going to do is I'm going to get my stop and I'm going to bring it down to just above that area. Okay, so what we're looking at here is we have 70 pips of risk against a potential £354 worth of potential profit, which makes that a 5.02 to 1 risk reward. I'm more than happy with that. So we're never going to risk more than 1% of our account anyway. So as per usual, we go into the market, go into the deal, set up and start to set up the trade. What is it I want to do? Well, we're in the box. I've seen what I needed to see. I'm ready to sell this market. So what I want to do is sell at market, and I want to risk no more than 1%. So let's see what that means. Okay, so risking 1% is over £1,000 worth of risk to make 4.2 thousand. Now I don't want to risk more than £1,000 in risk. So what I'm going to do is I'm going to go 0.95, and let's see what that makes my risk. Let's bring that risk down. That's more like it. 990. So that makes my risk 990 against 4175. Let's enter this market and let's see how the trade goes. Guys, I'm going to leave it right there. Again, as you can see, it's the repetition, the consistency of doing the same thing. Granted, markets aren't always trending as they are at the moment, but when they are, you have to take advantage of those and do, make sure you stick to your plan. And here we are again, re-entering the Aussie dollar, Japanese yen. And I'm not biased in this market. At the moment, I just see what I need to see here. So let's see if we can capitalize. Have a great day, traders, and I'll catch you all soon. Good evening, traders. It's currently Thursday, the 12th of March, and it's currently 15 minutes past 12 UK time. If you guys are liking the content that I'm bringing to you, please feel free to subscribe or press the bell icon or make a comment just so I can know that you're enjoying the content and to continue. But without further ado, let's move on very quickly into the markets. We've been playing a Aussie dollar Japanese yen trade for some time now, and I've uploaded various videos, and this is another part of the process because this whole process started New Year's Eve with a paper trade for practice. That trade worked out well, so we then decided to take a proper trade using live capital. That trade went well, and based off of what I saw at the end of that second trade, we saw another opportunity showing itself in the market, and I'm going to go into that opportunity now just to let you know where we are. Okay, so here we are again in our third go at this Aussie dollar Japanese yen market. And if you remember, let's just fatten this up. We were playing this. Let's go up to the monthly chart. We're playing this downtrend, this long downtrend we're playing. Okay, back down to the daily chart. And we're looking for corrections to sell into. All right, now we've done very well. As you can see, here's where we first got in, up this little red arrow up here, New Year's Eve. Here's where we added to that position, okay, closed out here, and here's where we made a position just last week, okay, and here's the arrow where we closed out. And now this red arrow here, don't know if you can see it, is just our current position. So let's go down the time frames and let's just show you what I'm about to do, because it's not a long video tonight, because this is more about trade management other than anything else. So what I want to do is I want to go straight down to the 1 hour chart. Okay, so let's do that right now. Now, if you've been watching my videos, what you will know is when it comes to pulling my stops to break even, I have a consistent method of doing that. And what that is to take the level of risk and project that forward and use that as an area to bring my stop down. So here's my stop. The blue line up here is my stop loss. Okay, and what I do is I draw a vertical line from my stop loss down to my entry, which is just here. What I then do, and let's just get rid of that because that's where the bar is. What I then do is I project that bar down. So I line it up with my entry, and that was my risk, and this is where I'm going to take my stop. Now, I'm just going to get rid of the studies and fatten this chart up, because this little red arrow in here is where we went short. And since then, let's get the studies back on. What's happened is price has come down. Here's my bar. Here's my vertical line, and as you can see, price has taken us in, gone past my vertical area where I should be taking my stops to break even, okay, and then reversed. Now all of this happened while I was out. So price came down, went past my my level of bringing the stop to break even, and when I finally got back up into the chart, we were back up here. So I thought, well, okay, my overall feeling on this trade is still bearish. So what I'm going to do is I'm not going to move to break even, because obviously we were in a slight deficit at that time. So I'm going to wait and see if we can get down to this level again. Whoopsie daisy. So what has in fact happened now throughout the course of today? Yet again, let's just move this bar across. If I move it across, as you can see, price has come down into that level, the level where I should be moving my stop to break even, and pipped out at just a little bit below it, and then retraced a little. So what I'm going to do now, seeing as price is where it is, I'm now going to bring my stop to break even. And there you go. So we are now in a no loss situation. We can't lose in this trade. So I can now delete this. I can also sit and leave this trade and see if we can get in and make a third set of profits on this trade. So I'm going to leave it there, folks. It was only going to be a short video to do with trade management. Let's see how we go, and I'll bring you up to date once we have anything more meaningful go on. Traders, as I keep saying, keep trading your plan, and you will do this. You will become full-time traders if that's what you want to do. So I'll leave it there for now, and I'll speak to you all soon. Good night, traders. Good evening, traders, and welcome to Hautrader UK. It's currently 10 AM UK time, and it's Monday the 16th of March. Hope you guys have all had a good weekend and are ready for the new trading week. I just wanted to recap a trade which we've just been killing for over a month now. The Aussie dollar Japanese yen. And it's actually a trade I took last week on the back of a previous winning trade, or two previous winning trades in that pair. And it's the Aussie dollar Japanese yen. I'm going to just recap the final part of the trade for you, just to show you where we ended up and exactly what happened. But here we are. Just wanted to show you the time based on the UK clock. And without further ado, guys, let's get straight into the market. So what we have in front of us here is I'm going to be quick with this trade. So what we have in front of us here is the Aussie dollar Japanese yen, and we're on a daily chart. And let's have a look at the monthly chart. Look at that monthly chart. Look at that tirade of downward price action, guys. Look at that. That's just so, that is just a dream. The market doesn't do this all the time, but when you see this kind of price action, you certainly have to capitalize on this, and try and get on. Now, around this, and you can see all the arrows here where we've been trading, and around this area we entered this market 3 or 4 times and have been profitable every time. Okay, and what I'm going to recap now is the final trade, which just as we'd closed out one trade, I spotted the opportunity, and as a training exercise and also a profit exercise, I showed you what my thoughts are. Well, I just want to go right down to the 1 hour chart. Well, let's try the 4 hour chart first. That's correct. So at the time, 1 hour chart is where I need to be. So at the time, when I was talking to you about this trade, we had just closed out a trade somewhere in here. In fact, just around this line here. And this was where we'd got in at this arrow just up here, and we'd made all of this profit, 660 something pips. I can't remember exactly what it was. And as I was talking to you about that trade and bigging myself up, I spotted the potential for another trade. Now, price action was, if I remember rightly, it was this bar here is where we're at. And I took some measurements, and I did some Fibonacci. I took some Fibonacci measurements, and I projected this box here. Now what this box consists of is an equal legs 127 fib retracement. This bottom line here being the equal legs, and sorry, I tell a lie, this top line here being the equal legs, and this bottom line here was actually a 618 fib retracement of this swing. It all culminated in this area here. So what I did is I set a limit order at this box. And no, that's actually not true. What I didn't set a limit order. I just kept an eye on the trade. And when I came back to the market, price had moved up into this area and given us these negative bars here. Now I sold this market at that point. And what happened is, if you remember, when I enter a trade, I don't risk any more than 1% of my account, okay? And I then take my profits once my price has moved the same distance as the risk I had in the market. Well, I was away from my computer when price made this downward move, okay? And my risk came to about here. So I missed that opportunity to take my trade to break even. So when I finally did get back into my computer, price was actually up here and we were in a slight deficit. But I looked at the trade and I thought, well, hang on, Ray, your overriding bias is still bearish. So stay with the trade, and hopefully the trade would give you another opportunity to move your stop loss to break even. And as you can see, it actually did that. Now I cannot remember whether it was in here, I think it was in here, or in here, no, it was here, that we moved our stop to break even. And then what happened was price moved on down. Look at this, guys, look at this here. Price moved down in this line here, this blue line is where our take profit was. Price moved down into that take profit, some 200 pips or maybe 195 pips, something like that. And when I came back to my chart, price was we were in this bar here. We were in this bar, somewhere down here. Now, this made me laugh because this is so typical of trading. You know, it got right into my stop loss, into my take profit, and decided to turn on a dime. And at the time, I was looking at the potential. I was looking at what I would do if price had moved into this area, if I was looking to take another trade in this market. And I looked at this area here as the potential place to take another trade. And in fact, price was actually butting up against that level. Now, what I decided is, because price had got so far into my take profit, and it could only have been the spread that that stopped me from getting stopped out and taking all of that profit, I decided that no, I didn't want price now to switch over on a dime, come all the way back up here and take me out for break even, when in fact I was over 200 pips up. So what I did is I set a stop loss just above this bar. Just above this bar. Right above this bar. And as you can see, what happened is price actually went up and took me out. But guys, we still earned 190 something pips. Now as you can see, this blue arrow down here, it was actually the top of this bar which took us out. Okay, but we've done so well in this trade, guys, you can't do nothing but be happy with another nearly 200 pips. Now if I minimize the chart again, look in factors what have happened. Look what's happened. Price has come up past this level, taken us out in this bar, price has continued up, and then price has fallen again. So I was a little myopic in my trade. I was a little bit, you know, I should have been looking at the bigger picture when in fact I was looking at the smaller picture. But hey, I can live with 200 pips. And in fact, when having reviewed this trade afterwards, what I actually saw that is, if I had just done this, look at that, guys, look at that, 618 retracement, price came down, back up into a 618 retracement, and there's no two ways about it. I was talking about taking a potential short there, but I was a little bit myopic in that analysis. But when I look at what I could have done, again, the same process, break of structure, you know, pullback in a downtrend. It's like clockwork, guys. It's like clockwork. And if you open your eyes to this, you will see your trading become a lot more consistent, and eventually you'll start to see how this works, and you'll become consistently profitable. Now, if I'd stayed in this trade, we would currently be up 271 pips. But guys, we've made over 1,000 pips in this trade, so you've got to be happy. So I'm going to post this up to YouTube. I'm going to invite your comments, and I'm going to invite you guys. I'm going to be putting together a course sometime in 2020, and I'm just thinking about the format the course will take. And if you think that this kind of methodology is something that you can work with, send me a message. Just subscribe, make comments. You know, my email is attached to this my YouTube account. Please feel free to come and make your comments, good or bad, it doesn't matter. But I'm hoping you begin to see the power of this this system. Now, I'm only giving you 2/3 of the system. There's an ingredient that's missing, which is critical to the way that I analyze the charts. And obviously, I'm not going to give it you all straight away. But tell me what you think. If you're interested, subscribe. Make sure you get the next trades that I put up, and I'm more than happy to interact with people on that basis. But guys, another nearly 200 pips, one happy guy. Guys, trade your plan, fall in love with the process, and the profits will come. Good night, traders.